Hey guys, welcome back to my channel, McNallie Money, home of all things stock, investment, and personal finance related. Today we're going to be taking a look at a small cap company in the MJ space called Tilt Holdings. Before we get into the video, please take a second to like and subscribe if you haven't already. Without further ado, let's jump right in.
Hey guys, so as promised, today we're talking about Tilt Holdings, which trades on the Canadian Stock Exchange and right now is sitting at just under 80 cents a share. Now, before we get into the company analysis itself and my current position in this company, I did want to take a quick look at the financials here. So if we pull out to a 1 month graph, you can see that we've run up all the way from the mid 50s, 51 cents a share. And if we pull back to a 6 month, you can see this was actually trading right at 30 cents late December. So we've more than doubled since then, and we'll talk about my strategy as it relates to this recent run later in the video. Now, if we look at the market cap on here, you can see we're sitting at about $250 million. So this is a very small market cap company compared to some of the big players like Afria or Canopy or something like that. And that's one of the main reasons I'm so excited about this company. We'll talk about their revenue and their financials again later in the video. But when you take a look at their earnings and their EBITDA compared to their market cap, I think there's some big opportunity with this one. So the first thing I want to talk about here is the value proposition that Tilt actually provides its shareholders. So when you think about diversification, Tilt really embodies that. They touch a lot of different areas in the MJ space, and they're really properly set up, I think, to take advantage of multiple different phases of the buying cycle or the supply chain. So if you look here on the left, you can see they're involved with contract manufacturing, cultivation assets, inhalation supply chain, so that's going to talk about the actual Jupiter system or the vape pens themselves, and then custom hardware and packaging. So we'll talk about these in more detail throughout the video. Don't pay too much attention to the actual different companies that they hold right now. What I wanted to point out here is just the 4 areas that they really focus on. So wholesale flower production, product development, hardware and packaging, and contract manufacturing. Now in the MJ space, I was very hesitant to get involved with the actual producers themselves or the growers. I will talk about one company that I hold maybe next week that is in this space, but personally, if you think back to the gold rush, it's better to own the companies that actually supply the picks and shovels than maybe mine the gold or in this case grow the flower itself. I think they have more stability and there are higher barriers to entry in these type of areas. Now if you think about it, once legalization does happen, what we've seen in Canada here is a lot of people flood into the growing space, and it actually brings the prices of the flower down. So for companies like Tilt or even Valens that are focused on extraction, they can then get their core input at a discounted price, which expands their profit margin, whereas it's actually the growers or producers that are compressed and squeezed, and in a lot of cases, maybe pushed out of business from high competitive pressures. So now what we're going to do is actually talk about each of the companies that is held under the Tilt Holdings banner and how they fit into that puzzle or conglomerate that we saw one slide ago. So the first one and the most profitable, kind of the keystone of this entire company is Jupiter. So Jupiter actually focuses on vapes or vaporization technology, and they've produced what's called C-cell technology, which is years ahead of the competition. So this one actually stands out as an industry leader. And when we look at some of the numbers below here, you'll see that the sales rate on these kind of vapes is just skyrocketing lately. So Jupiter actually research, design, develop, and manufactures innovative vaporization technologies exclusively for natural plant-derived MJ extractors and oil consumers. You can see here they distribute cartridges, and this is where they talk about that C-cell technology, which you can see is a registered trademark because this is actually the best in the industry. The other thing I wanted to point out here, they work with over 800 brands, so they're very well known in this industry, and they were founded in 2015. They're based out of Phoenix, Arizona, but they actually manufacture their products in China. And this company, I don't know if it was honestly through luck or great planning, they kind of attributed it to Chinese New Year, but they actually stocked up on a lot of the inputs for this stuff prior to the whole COVID pandemic. So they've actually been able to continue production and distributing their product, even though there are a lot of demand challenges over in China with production, shipping, that type of thing. So that's really allowed them to step out from the pack and actually make their brand even more recognized during the pandemic time here. They did have some issues, I think a year or maybe 18 months ago when people started talking about some of the health concerns related to vaping, but that seems to have kind of subsided now and it isn't as prevalent in this type of industry. So if we scroll down the page a little further, it actually highlights some of the main numbers. So you can see here, it ships to 33 states, so they're not even servicing all of the US yet. 9 countries outside of the states, which is phenomenal. So you can see they've got that international expansion. Over 1,100 brands that are supported now, and they sell just about 5,100 units per hour, which is absolutely astonishing. When I saw this number, I was actually surprised. This is a ton of volume. I didn't even think they were selling this many units, but it's phenomenal to see as a shareholder. Now, if we jump into the investor deck, I wanted to highlight this slide just because it kind of shows how the Jupiter system works. So there's a couple parts to these vape pens. There's actually the battery chamber, then there's the oil or the MJ input, and then there's the cartridge itself where people would inhale from. So this is actually an example from Curaleaf Holdings, which is a company that they work with. So you can see Curaleaf actually provides the input while Jupiter provides the hardware itself for the vape pen. So if we then jump over to the Jupiter website itself, you can see here some of the different products they offer. Very sleek looking product. So there's different sizes of this C-cell, whether it's 0.3, 0.5, or 1 milliliter. You can then see the power supplies here, so different options there, and then the entire pens themselves if you want to go that route. So you can see there's a variety of different looks and feels. They all utilize that C-cell technology, so that's what separates them from some of their competition. And they even have all-in-one vaporizers that are kind of a throw-and-go type of scenario. The other thing that was cool on here is they actually sell automated solutions so people can fill and cap their own cartridges for these C-cell products. So I thought that was interesting as well, and that was something I wasn't aware of prior to doing my research here. So the next division within Tilt Holdings is actually Commonwealth. So this one's based out of Massachusetts, and this one was set up to actually serve the medical cannabis market or medical patients in the Massachusetts area. So Commonwealth actually has a 50,000 square foot facility, opened in 2018, and this is where they serve their customers in form of dispensary, and they also produce or cultivate on site there. So the other thing worth noting here is the company is actually planning to move into the recreational space as well once the state legalizes, and then they'll be opening retail locations throughout Massachusetts as well. So that's also important, and it's kind of setting them up for that next step. Now, if we talk about the numbers related to Commonwealth, you can see here 50,000 square foot production facility and cultivation. So this is where they do actually step into that growing space. They've done over 80,000 transactions, and they have 8,200 customers through their care patient or medical program. So if we jump back now to the investor deck, the thing I wanted to point out here is they've got a full commercial kitchen at this facility, and they can actually produce over 30,000 packaged units per month of multiple SKUs. So in the next slide, we're going to look at some of the products they actually make, but I thought this was really cool. They were also awarded Best Edible in Massachusetts, and they're actually planning to expand into Brockton and Cambridge with new dispensaries in 2021. Now, if we take a look at the products actually offered through Commonwealth, you can see quite a variety here. So they've got the flower itself, they've got pre-rolls, vaporizers, concentrates, edibles. We'll look at more of the edibles in a sec here because it's pretty cool, all the stuff that they offer. But you can see they really span that entire product category. They have deal of the day, so you can go in here and try different strains or maybe different variants that you haven't in the past. And you can see the price points here are very competitive with other distributors or dispensaries in this type of industry. So as mentioned, this slide actually goes into the details on some of the edibles. Now, for those of you who aren't real familiar with this industry, they can essentially put MJ into anything now, including gummies, chocolates, mints, stuff like that. So I wanted to actually take a second just to go through this and show you guys some of the variety here. So there's different types of mint packaging. There's different flavors as well, so strawberry, tangerine, stuff like that. Then they get into their chocolates here. You can see they've got covered berries, so cranberries, cake drops, stuff like that, sour watermelon fruit chews. They've got chocolate chip cookies or peanut butter chocolate chip cookies. And then they actually get into drinks and shots like that, even hot chocolate bombs. So you can see there's quite a variety here, and it really appeals to all different types of consumers. And the third area of the business I wanted to talk about is standard farms. So as the name implies, they are involved in the growing or cultivation space, but they also have a very robust extraction facility and operation as well. So this one's actually based in Pennsylvania. However, they do serve patients in Ohio as well, and they're specialized in cultivating and extracting pure and organic, natural medical cannabis products. So Standard Farms uses only natural ingredients throughout the entire extraction and cultivation process, and they actually test their products in-house in a licensed laboratory. So it really appeals to those customers that are looking for a high level of quality and consistency in the product that they use. Now, if we look at the numbers here on this one, they have a presence in over 95% of Pennsylvania dispensaries. So in terms of market share or visibility, it really doesn't get much better than that. They've shipped over 750,000 medical products since 2018, and they have over 40 different product SKUs. So when we talk about diversification, again, they're really spread out and they're not real focused on just one product or one vertical. So as mentioned, they're based in Pennsylvania. They've got nearly 34,000 square feet of cultivation. So this is actually where they grow the MJ. Now this investor deck is updated compared to the last slide. So you can see they've actually shipped over 850,000 products according to this slide. They were actually only the second grower or processor to set up in Pennsylvania and be able to sell their products. And they're market leading in terms of capsules, cartridges, oil syringes, and tinctures. The other thing that's interesting here is they do contract manufacturing or white label service, but they actually have their own product line, which we'll look at in a sec, branded under Standard Farms, and they also support the Jupiter brand. So you can see the synergies between Tilt's various holdings and how they work together to actually strengthen or leverage each other's brand awareness and opportunities. So here's the actual Standard Farms branded products themselves. So you can see here the various different product lines. I think it's always interesting and important to go to the company website, or better yet, if you can see the products in store, and just look at them as a general consumer rather than an investor, and just see if they're eye-catching, appealing, and if people are actually drawn to these products. So to wrap up the video here, before we talk about my own personal holdings, I did want to talk about the profitability here, because this is a company that for a while, they were looking like they were burning a lot of cash, and they were almost too diversified in a sense that they weren't able to focus on their core competencies. So when the CEO, Mark Scatterday, came in, he was very vocal, and he actually sent out letters to shareholders and said, hey, you know what, I'm going to focus on profitability. We're really going to cut down on any frivolous expenses, and we're going to ensure that we hit positive EBITDA. So if you look at year-to-date Q3 in 2019 versus 2020, you can see a tremendous change here. And then if you look at the actual cash from operating activities, you can see this year is positive compared to negative in 2019. So it's important to me that, number one, he identified this, and number two, he followed through on his commitment to turn this ship around and actually start generating positive cash flow. Now, Tilt reported Q3 earnings in late November, which means Q4 and year-end should be out right away now. And there's a couple things I really wanted to point out in this earnings report and talk about in a little bit more detail. So number one is going to be their record EBITDA. We'll go through some of their revenue numbers as well. And then the sale of Blackbird. So for those of you who are unaware, and like I kind of just talked about actually on the last slide, I felt like this company was almost spread out a little bit too thin. They actually had another division called Blackbird that focused, it was a software solution, and it focused on kind of point of sale, transaction, inventory management, stuff like that for retailers. However, they weren't making a lot of traction in this industry, and it was very competitive. So they actually sold that off. We'll talk about what they got for it in a second here, but I think that was a great strategic move to really allow them to focus on areas of the business where they were seeing maybe better success. So in terms of revenue, you can see $40 million for the quarter. Now the thing to keep in mind here, you guys, is while this company trades on the Canadian Stock Exchange, it operates in US dollars. So this is $40 million US. Now, if we think about that on an annualized basis, that's $160 million. And if we convert that to Canadian currency at, say, a 1.3% exchange rate, that's 208 million. So their market cap is 250 million, and they're generating, say, 208 million in operating income or revenue each year. So they're trading just over 1 times sales, which is absolutely insane for this type of industry. and really any company, to be honest. Now, you can see a 24% increase in the cannabis segment, which is great. Gross margin actually crossed over 30% for this quarter, so that was up from Q2. And then you can see here the record EBITDA of 2.8 million. This is actually the third quarter in a row they've had positive EBITDA, and it's up 134% from the second quarter. So when you talk about the CEO following through on his commitment, that's exactly what I like to see. Now, here's a quote from Mark Scatterday himself. In the third quarter, we saw sequential growth across our core Jupiter and plant-touching operations, reflecting our diversified position within the growing U.S. cannabis industry. So this is phenomenal because, as mentioned, the U.S. has a huge population compared to Canada, and this industry is just starting to develop, and they're already so well diversified and well connected in this space that it's going to be a very easy transition when recreational opportunities or legalization occurs. Now, as we scroll down the page here, you can see that revenue is down slightly from the second quarter overall, which is not a huge deal really considering the COVID situation. They talk a little bit more about gross margin. This is the only concern that I see on this earnings report is the actual cash balance of under $5 million. So it's never great, especially in a very competitive industry like this one, to not have a good cash position. And that's why I was so happy about this Blackbird sale. So if you scroll down here, again, all great news. You can see Jupiter's revenue up 20%, Standard Farms up 24%. This is actually where they talk about the sale here and the divestiture of Blackbird. So you can see it was actually only contributing 4% of revenue year to date. So it really was only a scratch in the bucket here. They were able to get 15 million US for this company. So it's a huge cash injection. It really gives them that flexibility to execute on their other business units, and I think really doesn't harm or hurt the company in any material way. So I was really happy to see this, and I think that's a great move to kind of focus on what you're good at and maybe get rid of the stuff that isn't as important to the company. Now, to close out the video, I did want to talk about my current position in Tilt. So I have this company in a few of my accounts. In this one, I have just under 12,000 shares at an average price of 65 cents each. So we're up over 20% with this. Like I said, I think this is still in its infancy stages and there's a lot of room to run, but we have made a nice little profit in this one so far. If we jump into my other account, you can see in this one we're holding 9,500 shares, average price of 52 cents. So we're up nearly 52% overall in this one. So doing great here, but again, I think there's additional upside. So between the two accounts, I am holding just about 22,000 shares. So for every 1 cent the share price increases, that equates to about a $220 movement for myself. I actually did go in and sell an additional 2,000 shares earlier this week at 89 cents. So I'll show you that one as well. And the reason for this was not to get out of Tilt overall. It was actually to average down. I feel like there may be a little pullback here, and we've already saw it drop about 10 cents from this sale price. So I think I may be able to pick up some additional shares a little bit cheaper and actually get that position closer to about 25,000 shares overall. So that's it for today's video, you guys. I hope this opened your eyes to a new company. Maybe some of you haven't heard about Tilt before. I honestly think there's a lot of opportunity with this one. It's very affordably priced, and I think there's a lot of room to run, especially as we move into legalization in the next maybe year and a half. So thanks for watching. Please remember to like and subscribe to the channel if you haven't already, and make sure you have a great rest of your day.